Hello and welcome to this specialist trading presentation of the trade of the week. And in today's presentation we're going to be talking about strategy number 8, probably one of our most overlooked strategies for trading stocks. I'm going to share with you two signals that were generated, one in Facebook and one in Hershey this past week. Welcome once again. My name is Primo. I'm the president and founder of Specialist Trading, and we are an educational company where I take the tips, techniques, and the strategies that I've accumulated in my 37 years of trading, and I teach them to my students and members so that you can ultimately empower your own trading. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results with strategy number 8, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's Trade of the Week webinar. And one more thing before we begin, I want to invite each and every one of you to follow us on Twitter. There's our handle right there, at SPCLSTTRADG. We post a lot of great free information on a daily basis, anywhere from signals that we are currently in, and just not only the stock market, but also E-mini futures as well as the currency pairs. And we also give daily wisdom from time to time. So there's a lot of great free information on a daily basis. So I invite each and every one of you to follow us on Twitter. All right, so let's begin talking about strategy number 8. Remember, once again, this is a stock strategy specifically designed for stocks, and it's often overlooked by many of our traders, but it's a great little strategy, and it's an extremely powerful one. As I said, it's designed to trade strong trending stocks, and we'll show you exactly how we find those strong trending stocks. It has two particular types of exits. One, the standard format, which is a dynamic exit. The other is a discretionary exit. Now, a dynamic exit is one where you go into the trade not knowing where you're going to be getting out. You see, that's a fixed exit where you have some type of a target level where you will place your order, your limit order. With a dynamic exit, you're usually following something that will tell you when to get out. In this case, we're following a proprietary tool which tells us when it's time to exit the trade. Now, once again, you can either use this standard format of the dynamic exit, or you can use a discretionary exit using your own insight, which we teach you what to look for in trading this particular strategy. Now, with this particular strategy, once again, if you're using the standard format, you're usually in and out of the trade anywhere from 1 to 5 days. So it's not something that you're really usually going to be trading a lot. Why? Because you're in already strong trending stock, we're usually trying to capture that last bit of profit within the stock, so that we're squeezing the last gains out of the stock. So we're not going to be in it for a long time. Because of this, it's a rather intense strategy to trade. If 1 is the most intense of our strategies and 3 is the least, it's a number 1, meaning that you're pretty much going to have to be in front of your computer for a large amount of the time. One thing we want to remind all the people, though, is that our strategies are based in consistency. From time to time we will hit these home runs, but that's not our goal. What we're looking for is a 2-step forward, 1-step back approach, meaning that we will have small losses from time to time, but we're looking for this nice consistency in our trading that will ultimately sustain us, so that over time we'll have this nice upward slope in our equity curve. And I think that's what a lot of people are searching for in their trading. All right, so let's look at the first example. This is Facebook. Now, looking back the last couple of weeks here, as we see, one person might say right off site, well, Steve, I thought we were looking at strong trending stocks. There is no real established trend here. Well, that's not true. According to our buy-sell line, which is the 50-period simple moving average, if price is a fair enough distance away from that, that's telling us that we meet the requirements of being in a rather strong trending issue, such as Facebook right here. Another thing we look for as well, another part of the requirements for the rules, that if price is above the 50-period moving average or the buy-sell line, we're only looking to go long, so only long signals will be generated. Obviously, if price is below, only sell signals will be generated. But in this case, we're far enough distance away from the moving average. At the same time, the requirements were met to generate a buy signal on the 29th of August. This was last Friday, actually. Now, if you were a more aggressive trader, you would have been privy to this signal being generated in the last half hour of trade. So you could have chosen to enter the trade on that day. Or if you wanted to use the more conservative approach, you could have entered on Tuesday of this week, the first trading day of this week. Either way, you would have gotten long, and look what happened the next day, you're on Tuesday of this week, you would have exited using the standard format and had a nice anywhere from 2 to 3 point profit in just one trading day. That's basically the way strategy number 8 works. It has just very few rules that must be met, anywhere from roughly 3 to 5 rules that must be met, determine how you're going to be trading it. And then you just can use the standard form of exiting, which goes off this dynamic exiting tool, and then you're out. Now, this was generated on the 29th. This was last Friday. And why? Because we were above the 50-period simple moving average line. That's why a buy signal was generated. Now let's look at a different stock using the same strategy, but this time we're going to be going short. Why? Because price is below the 50-period simple moving average and a fair enough distance to meet the qualifications of being in a strong downward trend. Remember, if price is above, buy signals will only be generated. If price is below, sell signals will only be generated. So now we're looking at Hershey. It meets the requirements for a sell signal to be generated on the exact same day, August 29th. Okay, so if you had been a more aggressive trader, you could have gotten short that day because you would have been privy to seeing that a signal was going to be generated in the last half hour of the day. Or you could have gone long the next day, trading day, which was Tuesday of this week. Either way, you're in the trade, and it didn't look like much was going to be happening that day on Tuesday, but you're not stopped out. You have your proprietary stop in place, and you're following this tool to tell you when you should exit. Well, you remain in the trade for just a couple of more days, and I believe this was yesterday. On Thursday, you would have exited for a nice anywhere from 2 to 3 point gain, depending on how you traded the particular strategy. So, as you see here, two particular signals in the same strategy, but different stocks, generated one buy signal and one sell signal on the same day. This just goes to show we don't look at the overall market to tell us what to do. We take each individual strategy for what it is. Regardless of one is given a buy and one is given a sell, we look at each individual chart. That's our philosophy at Specialist Trading. All right, so let's recap. We just shared with you a simple but high probability strategy for trading strong trending stocks. Remember, this is particularly designed just for stock trading on daily charts. It's not that great of an intraday type of trading model, and it doesn't work that well if you're looking at E-mini futures or currency pairs. So it's a great way to trade individual stocks. We just shared with you a couple of the rules. Remember, once again, we use our buy-sell line. If price is above the 50 period, we're only going to be generating buy signals. If price is below, we will only be generating sell signals. Also, we need to be a fair enough distance away. We cannot be looking for signals that are right next to or touching that 50-period moving average. That would be a totally different scenario and require some other type of pullback scenario. This is looking for more of a continuation into the upper realm of a trend that has already been established. Now, if you're interested in this strategy, learning more about this strategy or any other of our strategies that we promote and sell at Specialist Trading, you can go to our sister site. That's Pro Trader Strategies, and they once again market all of my individual strategies and techniques. You can contact them by emailing any one of their trading consultants at trading@protraderstrategies.com or calling them directly at area code 310-598-6677. They can tell you about current specials and discounts that they may be promoting at the time, and you can also have payment plans available. Thank you so much for attending this Trade of the Week presentation. Once again, just take one last look at our disclaimer before we close. Strategy number 8 is a great strategy if you're a stock trader, so I look forward to all of you becoming members of the course and as well becoming members of Specialist Trading. Thank you so much. We'll see you next week. Bye-bye.